Good morning, you're watching Business World Live. I'm Jes Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. S&P Global Ratings is painting a rosy picture for the Philippine economy, saying it may register the second fastest growth in the ASEAN region this year. The Debt Watcher also says a credit upgrade could happen over the next 2 years if the economy recovers faster than expected. The projection comes after the country's statistics agency announced the domestic GDP shrank 9.5% in 2020, its deepest dive on record. S&P expects the Philippine economy rather, to grow 9.6% this year. That's the second fastest after Vietnam's 10.9%. Philippine GDP is expected to perform better than Malaysia, Singapore, Indonesia, and Thailand for 2022. S&P forecasts the Philippines may post the biggest growth at 7.6%, better than Vietnam's 6.8%. Now, S&P has earlier affirmed the Philippines' rating of BBB+, or 2 notches above minimum investment grade credit rating with stable outlook. It says a credit upgrade is possible if the economy recovers much more quickly and if the government implements achievements in its fiscal reform program that would result in the lowering of indebtedness to below 30% of GDP. Okay, time now to have a go at how shares are performing at the start of Friday's trade here. We're just a minute into trading so far. The index, as you can see right here, continuing the sell-off that we saw yesterday. Shares are now down by 0.4% to 6,827.38. Yesterday, the index slid close to 0.2% after the country's full-year GDP crashed to its lowest end record yet at negative 9.5%. That's despite the contraction, seeing a bit of easing in the last quarter to negative 8.3. This from Bloomberg. You have COL Financial saying that we might see the ongoing correction extend some more, sending the index tumbling further to 6,400 before rising to 8,100 by the end of 2021. They are expecting the consolidation band to be between 7,500 and 6,600 to 6,400 this quarter. That's due primarily to weak market momentum as foreign funds continue to exit and trade volume slows. You have April Litan saying that shares may still climb despite not so great fundamental, but what's going to boost stocks would be low interest rates, vaccination rollout, as well as a further reopening of the economy and fund rotation to emerging markets. So far, stocks today bucking gains that we are seeing across Asia here. You have Asian stocks here following gains seen in the U.S. This is fears in Wall Street subside following the turmoil caused by internet chat rooms, creating fears of broader consequences, especially for hedge funds here. In fact, GameStop, of course, surging in post-market trading. This is they have finally given the go signal to actually allow some buying here so far. Asian indices that are open, enjoying some gains here. You have the likes of Japanese stocks here. The Topix is up 0.3%. The Nikkei likewise also surging just by as much. Kospi also outperforming here. It's in the positive territory, up by 0.2%. Australia likewise is also in the green here, edging higher by 0.7%. But back to our source, let's check in on some specific stocks here. Let's begin with BPI. We did report this yesterday afternoon after trading closed here. They did release their earnings figure for the last quarter and full year 2020. Their net income for the fourth quarter came in at 4.2 billion pesos. That's a lower turnout by 38% compared to last year's 6.77 billion pesos. Looking at how it's performing so far, the stock, as you can see here, is down by over 8% at 82 pesos and 25 centavos. And while we're at it, might as well have a go at how the rest of the index is performing, at least in the counter here, the financials. Let's see if most of our lenders will also be following suit after those disappointing figures here from BPI. As you can see, however, RCBC bucking at least that sell-off here. The sector is so far down by 0.6%. but RCBC making gains here. It is up 1 2/10%. But our major lenders here, BPI again, down by over 8%, and Metro Bank also edging lower here, down by 1 6/10%. Now, from lenders, let's go to one particular conglomerate here. That's San Miguel. They have commenced their work on the 1.2-kilometer link between the Skyway Stage 3 and Metro Pacific's NLEX connector. President and CEO Ramon Ang says that that is expected to be completed in 24 months or less. That is as soon as right-of-way issues have already been settled. Looking at how SMC is performing, as you can see here, it's also joining the sell-off here across the boards. It is down 1 1/10% rather, to 123 pesos and 10 centavos a share. Now, let's focus as well on a couple of items here on the Ayala Group. For one, let's kick things off with their gas exploration unit, that is ACE Enexor. They have withdrawn from the consortium operating SC6, or Service Contract 6, in Northwest Palawan. This will allow the oil explorer to concentrate on SC55 in West Palawan, where the company is preparing for a drilling plan and potential partnerships. Plans include the drilling of an exploratory well in 2022. Get this, SC55 is in fact projected to have some 2.2 trillion cubic feet of gas. Now, from oil, let's move on to their energy unit, that is AC Energy, which has raised close to 5.4 billion pesos in stock rights offered. The Ayala unit sold 2.26 billion common shares at an offer price of 2 pesos and 37 pesos a share. Proceeds will be used to finance the development of its various power projects, inorganic growth opportunities as they come, and other general corporate requirements. Looking at how both stocks are performing so far, as you can see here, ACE Enexor, however, is on a decline here, sliding close to 0.2%. It's now priced at 13 pesos and 28. That's correct. That's 13 pesos and 28 centavos a piece. AC Energy, however, as you can see here, now priced at 6 pesos and 6 pesos a piece. Now, here are other headlines. We're keeping our eyes on Nissan Philippines is planning to introduce its electric vehicle, Nissan Leaf, to the local market this year. Nissan Philippines President and Managing Director Atsushi Najima said they are now in talks with government agencies for potential support as the company imports electric vehicles. Recall that the recently approved additional safeguard duties on imported cars exempted electric vehicles. Moving forward, Nissan says its import strategy for 2021 will depend on the decision on the Tariff Commission on the potential retention of safeguard duties. The Labor Department says pandemic-hit companies cannot absorb the, quote, sharp rise in minimum wage demand by unions. Secretary Silvestro Bello III says there's a need to balance the interests of workers and of employers. He added that a 700 to 750 peso national minimum wage just cannot be handled by employers right now. But labor groups have been calling for an increase in the minimum wage in the wake of skyrocketing prices of basic goods way before the pandemic started. The current daily minimum wage in Metro Manila stands at 537 pesos or 434 pesos when adjusted for inflation. It's even lower outside the capital, with minimum wages ranging from 310 to 420 pesos and falling further to 234 and 333 pesos when adjusted for inflation. But Bello insisted that MSMEs, which comprise nearly 99% of the country's registered businesses, will be the hardest hit by a wage hike at a time when they are barely surviving due to the pandemic. Now, infrastructure spending reached 681 billion pesos in 2020. That's 35% lower than the previous year, but exceeded the downscaled government target. In the fourth quarter alone, the state spent 230 billion pesos in infrastructure projects, but still it is 40% smaller than the amount spent during the same period in 2019. NEDA Acting Secretary Carl Chua says that the declines were expected given the high base in 2019 when the government rolled out a catch-up spending plan to make up for the budget delay. For this year, the budget for the infrastructure sector is expected to reach 1.2 trillion pesos, or about 6% of GDP. With vaccines expected to arrive by next month, that is in a few days, much of the discussion also now revolves on storage and distribution. To discuss how the private sector might aid on this front, we have on the show the former president of the Philippine Chamber of Commerce and the private sector representative to LEDAC, George Barcelon. Good morning, Sir George. All right, sir, I think you are muted.
I'm mute. I'm sorry. Good morning.
That's good, sir. Okay, so let's kick things off first. As I was mentioning, much of the talks now would be revolving around distribution and shipment of vaccines. And the government is already in the works. In fact, they're saying that to actually tap the private firms here for cold chain. How are private stakeholders preparing for this, and are their facilities really ready?
Well, the private sector, through the initiative of Presidential Advisor Mr. Joey Concepcion, has started about 3 months ago, getting in touch with one of the vaccine manufacturer, AstraZeneca, and he has enjoined the private sector to put in orders in advance. The reason why government at that time could not put the order is that those vaccine have not been FDA approved. So it's only the private sector who put forth the advance payment to order those. As of now, I think it's about 17 million dosage. Aside from that, there's another initiative that was done through the effort of Mr. Ricky Razon of ICTSI to bring in Moderna, which is another vaccine that has very high efficacy. So we would be expecting some of this vaccine to be here at least, I think, second quarter of this year. Talking about the government support to get the citizen vaccinated, there's a budget of about, I think, 72 billion pesos, which is earmarked to have 50 million Filipinos vaccinated. Of course, this is within the age of, I believe it's 18 to 65. Of course, there are priorities to be followed, to be set by the Department of Health.
So, okay, Sir George, I want to drive into one point that you made earlier. Of course, the private sector is front and center, especially when it comes to the purchase of AstraZeneca. Do you have a timeline for this? Yesterday, of course, the EUA for the vaccine was approved, and vaccine czar Carlito Galvez did say that they are expecting AstraZeneca shots to come in by February. Would this be the shots that will be coming from at least purchased by the private sector? Do you have a timeline for this?
Yes, well, the timeline, as I said earlier, the timeline is sometime in second quarter of this year. There are some, there are some. Those that will be coming will be in volume, and I think the government now that has to prepare, because once this comes in, government is targeting 200,000 inoculation a day. So that's quite a challenge, the logistic for that. So government has been working, I believe, with some government schools to be used as inoculation centers. And by the way, just to clarify, all this vaccine that will come in will still be under supervision by the Department of Health. It is not going directly to the hands of the private sector. And the protocols that will be set, who are the people accredited to do the inoculation, will have to follow the guidelines of the Department of Health.
But shifting the discussion over to cold storage here, to cold chain in particular, do we actually have enough facilities to actually hold these vaccines, considering that they have quite some hefty requirements here when it comes to temperature?
Yes, the two vaccines that I mentioned earlier that will be coming in volume. The first is AstraZeneca, which doesn't require very low temperature refrigeration, which is regular refrigerator to do. Now, the second brand is Moderna. Moderna would require a lower temperature, minus 20 degrees centigrade. And from what I've gathered from the ICTSI, that Suilik is the one who will take care of the logistics as far as bringing in this Moderna. So they are preparing the necessary refrigeration for this lower temperature of -20.
All right, so ICTSI at least on the forefront when it comes to the delivery of vaccines here. Now shifting the discussion over, of course, to the latest on the economic front here. You have houses, both houses, it seems, focusing on amending the economic provisions of the Constitution to ease foreign ownership restrictions. How is the sector taking this, sir?
Well, we're very positive. We're 100% behind Create. We think that Create will be a game changer to boost our the confidence of investors, not only foreign investors but also local investors. But just to repeat that Create is really very beneficial for the country's MSMEs. It's skewed towards favoring them because they are the one that is hit hardest in this COVID pandemic. They have tax break, and they have a lot of clause there that is that is beneficial to the whole private sectors.
Are there fears, Sir George, that Create might actually be sidetracked, given that much of the focus now, when you try to look at the news, is that both houses of Congress are really eager to actually amend economic provisions here of the Constitution? Do you feel like Create will be sidetracked, or should it be complementary to the changes that they are at least trying to inject when it comes to these economic provisions?
Yes, yes, sir. You said it. You said it right. It's complementary. Okay. I think the as far as going through the cha-cha route, it's something that we have to really look forward. But in the meantime, there are pending laws such as the foreign investment, the retail law, the public service, and many of these are really to open up our country's economy to more foreign investments. And it would be addressing that issue through Congress, I believe would be easier than for Congress to constitute themselves into con us. We need to immediately move into this because we're behind the curve. As of now, investments, because of the US and China tariff issue, many are relocating. And we hope that Philippines would be a country that gets into the radar. Most of them now are shifting to moving to Vietnam. And our foreign direct investment compared to Vietnam, we're only getting 1/5 of what Vietnam is getting. So it would be with all of this Create and the new laws, hopefully, that would be passed through Congress, the foreign investors will take a more serious look in investing in our country.
Okay, looking at things from that perspective, of course, the hope, at least from the private sector, is that these economic changes, or at least changes in economic provisions in the Constitution, would at least help bolster foreign direct investments. Thank you very much for your time this morning. George Barcelon, former president of PCCI and a private sector representative to LEDAC. Thank you, sir.
Thank you, Jes.
And that's a first look into the business day this Friday, January 29, 2021. Catch Business World live for the market close at 3:15 p.m. today. I'm Jes Delos Santos. We are One News.